Welcome back to the weekly review. We're going to be looking at the trading week of April 7th, 2025. Black Monday, maybe. I'm not sure. And I'll be the first person to say I don't really know what this market wants in the interim. Friday was extremely nasty. Friday was one of the first days, in my opinion, that we've seen where it looked like real panic and real high volume liquidation selling. And we put in about 3.5 million volume total on the day on the session for the S&P futures, which would also suggest that. So whether or not we get continuation right away, come Globex Open at 6 p.m. today. It's about 3 p.m. I'm recording this Sunday. It's about 3 p.m. So we open in about 3 hours. Whether or not we continue right away, right off rip, or we consolidate a bit, potentially put in a lower high, move back down, or if we find some balance down here, I'm not totally sure, but I'll go through some of the areas that I'm looking at this week on the S&P and kind of generally how I feel about this. And again, I'll be the first person to say I don't know how much more down this is going to go. I have areas I'm interested in. That's the only thing I can really do and watch. I've been trading for quite a while, going on 10 years now. And trying to arbitrarily pick bottoms is very difficult, but there are places where I think risk can potentially pair for a decent bounce and decent long trade and swing long potentially that we could start seeing form this week. So we'll go through that in a second. Let's start with data very quickly, like I normally do. Not much until later this week. So we have Monday, Fed speaker Kugler speaks at 10:30, consumer credit at 3:30. Tuesday, 2 p.m. Daily is speaking. We have Wednesday, we have a BOJ press conference that is TBD as far as when that's scheduled. I don't have any notes. I can't find anywhere if that's actually scheduled for a time. So I'm not sure when that is, but that'll be during the Asian session. Wednesday, we have the FOMC minutes being released at 2 p.m., so that's quite important. I don't think there's going to be anything in there that's shocking to the market. I think everything that was shocking to the market is so far, unwinding. So I don't think there's going to be anything, hugely net new in those. But you need to note that obviously 2 p.m. Wednesday, we could have some volatility or more volatility, hit the tape. Thursday, 8:30, big one, CPI and jobless claims. We also have 1 p.m. We have the 30-year bond auction on Thursday. Federal budget comes out at 2 p.m. on Thursday. Friday, PPI at 8:30 a.m., 10 a.m. consumer sentiment, and then the University of Michigan inflation expectations come out at 10 a.m. as well. Those will be important. The one-year inflation expectations have been drastically rising, due to the tariff situation. So that's been market moving pretty much every time it's come out in the last few times. Obviously, PPI is important as well. Friday is also marking the first day of bank earnings for this earnings cycle. So in the pre-market, we have Morgan Stanley, Wells Fargo, and JPM that are reporting. So kicking off earnings season in massive correction territory is interesting, to say the least. So we'll have to see, obviously, how those reports come in and what I'm more interested in what their guides look like, because I think that's going to be interesting to see how, after all of this has happened, after more and more information has come out with Trump's intention to continue tariffing and reciprocal tariffs and what have you. I think it's going to be interesting to see, how they're going to try and digest that for forward guidance this year, because obviously it's going to impact them quite a bit. It's going to impact everybody, but it's going to impact banks quite a bit. So we'll have to see. Going into the indices, last week marked March close and April open, obviously. So new quarter opens. Last week also confirmed that the monthly time frame is shifting to one time framing down or one time framing lower, however you want to say it. Whenever we have the monthly time frame shift, it's indicative of correction territory. And obviously we've already blown past 10% correction from the highs. But the big thing for me is that when higher time frames start shifting to one time framing down, it's a stark rejection of value higher, and the market is usually going to move into an imbalance phase and start searching for value lower. And that's exactly what we're doing. So not to go into too much detail about what happened last week, because I think, I think it's fairly obvious. We have the level that I have been talking about, I feel like forever, the last few weeks at least in these videos, 57.20 as the bottom of that prior monthly balance range. So that huge trading range that we spent months inside of balancing and distributing, that is 57.20 was the bottom of that range. It's right here. So we'll just go to the daily just so you can see this on TradingView because it's simple. So this huge balance range is a huge monthly balance. This is the Liberation Day spike. So this is April 2nd. So huge rejection of this prior consolidation, this prior balance range, and then that ultimately forced the liquidation lower as all the new information came out about the size and scope of the tariffs, and the market obviously was not priced correctly, nor was it hedged correctly for the possibility of higher than expected numbers on those tariffs. And Friday, again, like I said, was the first day where it seemed like there was a really big freak out and a lot of selling on the tape, which up until Friday, it was very controlled. And once Friday came around, still controlled, still quite controlled, but at the same time, it looks much more indicative of the beginning stages of capitulation. So at least in my opinion. So that's just how I see it. So we have two huge regular trading hour gaps above us. And this week we have about 320 points of range priced in on the S&P 500 cash index. So it's around the same on ES. That's a huge range to be pricing in. It's about over 4% range on the week to be pricing in from Friday's settlement based on the at the money options straddle going into Friday. So that inevitably that can lead to quite a bit of range that's going to happen this week, quite a bit of expected range is going to happen this week. And what could also happen too is if we have any positive headlines that start coming out either into open, into Sunday night, into Monday, that can also crush quite quickly, and then we can see a quick consolidation of range and balance start to form. So ideally what we really want to see is a trading range start to form. So the market has gone from a huge balance phase to an imbalance phase. And we're back inside, obviously 2024 trading ranges, but we've gone into an imbalance phase. And what we want to see is range start to form. We want to see balance start to form, and we want to see where value is ultimately starting to be built. And then we can make better assumptions about what the next move of this is, whether or not we're accepting value lower. Are we going to start putting in lower highs for continuation down? Do we see, rejections of value lower and sharp spikes up? Those are the things we have to start looking for, when we have a very fast move and fast imbalance phase that we've started right now. So the first thing I'm going to be looking at going into Globex Open, going into Monday, is the POC from Friday. So 5110 to 5120, which is the August 2024 swing low. This bottom range on Friday is going to set the tone for me pretty early on Monday going into Globex and going into the regular trading session. If we're struggling, so if we gap lower, which is entirely possible, we could gap down quite violently on Globex. So that's one thing to keep in mind. But if we have any attempts to bring us back over 5110 to 5120 and we can't find a bid over this, I think the rotation continues to be lower, and I'm going to be looking for rotations down into the big round number, which is 5,000. But I'm going to be looking for rotations into 4990s to 4960s. This area, I think it's possible that we might find some buying, might find a little bit of a bid down here, and that's primarily due to where we are sitting on higher time frames. So going down into 4990s to 4960s, we're getting into this cluster of prior monthly value and the bottom of 2024 value. So 2024's yearly distribution, we're starting to get into clustered months and clustered POCs and clustered value, where where positioning has been put in last year, and where I think we'll potentially find some supportive buying flows. So potentially, obviously, I don't know what's going to happen with this open, but this is at least an area of my interest. So I'll be looking at the bottom of this. I think from a must hold perspective, we'll be looking at 4862 in my opinion. That's a yearly value area low for 2024. I think that's going to be a critical line in the sand that buyers need to hold. The main reason, but another reason I'm looking at down here, not only does it line up with the bottom end of 2024 value, but we're starting to look down here at a full 20% correction from the highs. So we're looking at 19.5, 19, 20% down into this range right now. So I think the likelihood, in my opinion, of blasting through 4862s, doing a complete traverse of yearly value, is limited. I don't think it's going to be as clean of a knife that just blasts us through this. I do think if we get down into 4960s, 4930s, down into here, I do think we should start seeing some sort of balance and some sort of trading range form. We'd be getting into a 4 sigma move from yearly VWAP as well down there too. So very rare territory. Obviously it's entirely possible, but for me going into this, I am interested in looking to see how this area holds up and ultimately potentially how this area down in 4865s to 63s holds up for potentially long trades. Whether or not that turns into a swing long, whether or not that's just for a potential relief rip, I'm not totally sure, but I think we should keep an eye on these two places down here. Monday's expected range is about 140 points as well, which puts us right down into here, right down into 4960s on the S&P futures. So something to keep in mind. Sellers are in complete control right now. That's one thing we do have to note. So any rip, until we start framing higher time frames up, so until the weekly starts shifting into balance and starts shifting to one time framing higher, which it's miles away from doing right now, we'd have to clear 57.39 to get the weekly back into balance. We should assume that sellers remain in control. With that being said, there's going to be a lot of movement both directions, and there's going to be some really nice rotations intraday. And the big thing for me will be watching, if we start selling immediately, we'll be watching down into here and down into here. If we're getting back above 5120s, then I think the likelihood of backfilling Friday's range is quite high, and I'll look to see if we can get a long trade up in here and potentially test the upper range of this gap. The thing we have to be aware of though, we're going to be below 2 regular trading hour gaps. We're framing down lower on higher time frames. We have to be conscious of lower highs forming potentially in these areas and reselling to go lower. That's entirely possible. So where I think we'd start seeing strength is if we start getting above this first gap. So basically, if we do find some acceptance back above 5120s and we can get back above this first gap lower and back into last week's value back above 5420s, then I think we could get a pretty decent squeeze. That would also be outside the expected move high for this week. Again, I'm not sure if that's going to happen this week, but we'd be outside that expected move, and we could potentially start seeing a bit of a squeeze to get us back up and fill these upper gaps up here. So big thing there. Early acceptance around 5120 to 5110s, and the area lower, obviously 5K, the big round number, but also looking into 4960s. And then the line in the sand for buyers, I think, on the market is around 4860s. That's my opinion, at least. So NASDAQ's going to be basically the exact same thing. Again, higher time frames, all framing lower, huge liquidation day. I think early pivot for me is going to be 17660s. Again, same thing. Like if we gap down massively, or if we gap down and we continue selling, I don't think we have, I don't think buyers have any footing until we get down into 17,300s to 17,100s. And again, we could potentially find a decent low down here for the rotation back up. But what we want to see is back above 17,660s, which turned into value area low for Friday. But this is where there was a big change in dynamic, at least before Jerome started speaking and completely fucked everything up. There was a huge change in dynamic here. And we had a really nice attempt to drive higher. So I'm going to use this spot here as the primary pivot, which conveniently is also value area low for that day. So, and again, same thing. If we start accepting above the gap, so above Friday's gap down, this is also 2024's yearly POC at around 18,300s. If we start accepting above this, then I think we could start igniting a squeeze quite a bit higher and potentially target back above last week's value area low and try and backfill these gaps as well. And again, we have to be conscious that we could see a lower high form somewhere in here, but all of that is going to be dependent on intraday tape and what that looks like. But as far as areas, 17,660, and then the lower pivot for me will be 17,200 to about 100 down in here. So it's going to be a really interesting week. I think there's a lot of people that potentially started trading in 2020 or maybe 2018 and some of those bigger downturns. But I think a lot of people that started trading in 2020, might be looking for like the COVID crash move, and maybe they're right. Maybe maybe we get something as extreme as that right away. I have my doubts. I don't know if we're gonna or I don't know if we're gonna see anything beyond potentially a 20% correction in the immediate future. I do think in the future that's entirely possible. Like later this year, next year, we could violently decline even more. I'm thinking these two areas are probably going to hold up personally. Obviously, if that's invalidated, we'll know pretty quickly. And I'm not going to I'm not going to try and just buy every dip here. I think a lot of people got hurt last week, just trying to blindly buy, and trying to put risk on to try and hold these areas on an intraday basis, and just obviously got flushed right out. So we'll have to see. It's going to be a fun week. It's going to be tricky. I would say weeks like this with a lot of volatility, size down. Just be careful. Don't be stupid about it. And good luck this week. If this helps you at all, please like the video. Please subscribe. That would mean a lot. I'd really like to get up to, about 100 subscribers, or about 82 right now. So anything helps. Thank you for your time.